Okay, welcome. Let's get right into the stock market technical analysis. We're going to go through the charts, using them to be our guide, looking for trade setups and opportunities that haven't quite played out yet. So we are going to go ahead and point those out. Guys, if you guys are finding value, drop me a thumbs up. And as I go along, if this is intriguing to you and you're interested in learning this as a skill set and not just watching YouTube videos, take my stock market technical analysis course. It's not free, but I priced it affordable for all. Again, I'm a firm believer in not giving away my time and assets away for free, but it's affordable and there's a lot of value there. So check it out if you're interested. Let's get into these charts. Starting off with triple Qs. Okay, pretty big reversal so far today. And so we're gonna look at that. So I'll start off with the daily chart just to give you guys the bigger picture. On the daily of triple Qs, this is our tech sector. And again, this is my most preferred trading tool when trying to analyze where the markets are going. This is the indice I like to trade because it moves the most typically. All right, so on the daily chart, main thing to watch is a bullish falling wedge pattern on the daily. Okay, so that's those trend lines there. And then as I zoom in, you can see, and also look at our bullish divergences building on the momentum indicators. Okay, those are intact and remain intact. Nothing's changed there. So we have bullish momentum, and we have a bullish price pattern, but then price continues to kind of drift lower, at least on the daily chart. Again, check out the course if you're not familiar with what these divergences mean. I go through all that in the course. And then on the on the daily, we've got some levels to watch. Obviously, the lows, the most recent lows, 270-ish right there, but we're still kind of hanging in there. So let's go down to the hourly chart. So today, you can see that we basically we were breaking down today in the first hour of the day below this 280, which was support on the hour. Okay, you can see we've got a cluster of hourly support candles there. We hit it there, it was support. We broke it, but the very following hour, they recovered that. And in general, that's pretty bullish to see that breakdown and a recovery. So I suspect there were lots of shorts that took short positions this morning as they saw the market crashing, and they're likely underwater if you took the position this morning on that breakdown. So they're likely going to be covering if we see much more upside if they haven't already. Okay. The other thing that I've been watching is this key level. We battled with it for the last few days. It's about 285. And we need to see that taken out. So again, until that gets taken out bullish and a breakout candle, we're not going to go up. But I do think that is likely going to happen. If I go down to the NASDAQ futures, you can see here the RSI kind of took out the bullish divergence. Let me zoom in. It's close enough where you could say it's basically an equal low. So you have a low, you have an equal low there. And then as I zoom in, you clearly have lower prices. So prices have been making lower lows while momentum is basically kind of flat on the RSI. And then if you look at the PPO, clear bullish divergence there on the PPO. All right. And we also have the bullish crossover right there. So in general, bullish, I'd say it's bullish momentum while we had this price action moving lower. We also have this wedge pattern right there that we were making, this bullish falling wedge on the futures, and we have a breakout to the upside. So that's bullish in general. I know it doesn't feel bullish, at least as of this morning, but clearly a decent size reversals going on. NASDAQ futures are almost flat. I suspect we close, I don't think we'll break that 285 today, but I suspect we close in this range around that 285 area. Okay, so whipping back over to the futures, to the triple Qs. Again, I'm still looking for a bullish breakout. I thought about stopping out this morning as we started to break that key level. Clearly, it looked like it was going to break down. The only thing that kept me in it were the futures. The NASDAQ futures still had that bullish divergence, and it had this bullish pattern. So looked like we were going to just have a quick whip breakdown and recovery. All right, so that in general, I'm still long. It's been a pretty whippy market, but we're still long. Now I'm going to go into some long setups, long trade ideas that haven't triggered yet, but definitely have some good potential. Roku. All right, Roku here. You look at the daily chart, and on Roku, same setup. You have this bullish falling wedge pattern on the daily chart for Roku. All right, this thing's been in a strong downtrend. From the all-time highs, we are down roughly 85%. So, I think we're going to get a pretty strong rally here, bear market rally. Again, bullish falling wedge pattern here on the daily. I've got all the tags of support kind of not measured out there. We broke out. We had a buy signal on June 21st, and I pointed that out. We had a nice little rally right into the first level of resistance, which is about 97.84. We then have now had a pullback and a back test, and that's exactly what we got today. So back test objective to go long here or add to a long position for the next rally higher. So again, that's how I'm treating this, as a back test, a breakout and a back test with the next leg higher, likely moving up to 110.65 as our next target. And at the end of it, I could easily see us running up to the 200-day way up here. Maybe that'll come in about 138.87. These are all key levels of resistance. But again, I like the entry point right there at that back test. I did go long, looking for the next leg higher. Next up, Etsy. So Etsy, again, we talked about this. We have, over the last couple days, clear downtrend line right there to watch. Bullish falling wedge pattern. Bullish divergence on the momentum indicators, clean and clear divergence. We had a breakout or a buy signal right here on June 24th. No follow through. They sold it down. But again, you can see the last few days, it's basically been holding this trend line. All right. Kind of chopping below, but then being bought up. You can see the big tails, the big wicks on the candles. That means every time it gets sold down, the buyers are stepping in to buy. All right, that exactly true today. Yesterday they were buying, closing right there. So again, this looks like a breakout and a back test with an objective long, basically right here and now for the next move higher. I see some resistance. We got some minor resistance right here at about 88.30 and good, decent resistance right up here at 110. 110.50. All right, so I like that one. We'll see where they close it today. Maybe they'll close it right here, keeping everyone guessing on whether this is going to break down or hold. But I suspect it holds and we rally. And again, that just goes back to the divergences showing us that there is bullish momentum here. PayPal, okay? Big bullish falling wedge pattern on the daily chart. Bullish divergence on the momentum indicators. This thing from the highs down to where it's at now has fallen about 78%. All right. We have, as of today, a reversal candlestick right there. So that is a potential bottom right now in PayPal. Now, typically when you get these candles, you look for confirmation. So we need to see another candle. I suspect we get it. And I suspect we probably close the week right here at this trend line. But again, that would be a near-term bottom. And the way I see it is what's likely going to happen, this is what I'm thinking, is we bottomed here, we rally up to here, get a little pullback, and then finally break maybe next week, break out to the upside. Okay, so this one's still, there's no actionable trade here because we don't have a buy trigger. I mean, yeah, if you want to step in early based on this candle, you can set a stop maybe below the candle. That's one way to treat it. Or you can wait for the breakout of this downtrend line here on the daily chart. Pretty decent resistance there. So the breakout of that would send us up to likely, we might get a reaction here at this high at 89, potential resistance here at 93, and then another level. I like this one. 93 is pretty solid resistance. So I think we probably trade right up to there, get a pullback, and then maybe continue higher. Setup right there, trade setup to the long side. Next up, Ford, okay? Clear downtrend line here. We actually have a bullish falling wedge pattern. It's really right about there. Bullish falling wedge, can probably extend that out, something like that. there. All right, there's your bullish falling wedge pattern. You have a new divergent low today. So today they dipped it down, made an equal low pretty much in price, and yet clear bullish momentum right there. See the bullish divergence? Not an actionable trade yet, but a trade setup. We need to take out this trend line right here. We take that out, first level of resistance, which would be 1338. And then likely you break above that, you probably run up to the 200-day moving average. And a good resistance right up in here at, it's all about 1650. Okay, so there's the trade setup when you get the buy signal. Oil stocks. Okay, so oil, you've got support right here, horizontal support on XLE, about 70.64. We take that out, and I do think we will. You're probably at least going to come down and hit the 200-day moving average. And we also have a trend line down there. You can see on the daily chart, we've got support right here. And we have a big range of support, basically down at 66.50 zone. So I think that's where we're heading in the short term on the oil stocks. I continue to think that probably, I don't want to be long oil stocks right now. I'd rather be short if I had to pick one. A lot of the trade has already played out. I think there's maybe a little more downside. I see stocks like ExxonMobil, XOM, and it's got this 200-day right down here at about 76.57. So I could see us fading down to that 200. So maybe some more downside there. Some of these other oil stocks have already hit their 200, so maybe just a little bit more downside kind of chop. Gold, so gold bullion, again, more of the same, just kind of stuck. Now, the thing about gold is we are creating, as far as I can tell, this wedge pattern, and it's kind of a bullish falling wedge, and we're just kind of wedging, just consolidating and coiling within this wedge. Also, if you look at it, this wedge is consolidating above this support line. This was former resistance, basically. You can see all the tags of resistance through here, and now it's acting as support. So it's still a bullish setup. We have bullish divergence on the momentum indicators. We are consolidating right there on support. So I think, any minute we're going to get that breakout. But again, we just have to wait and see, just wait for it. And then the miners kind of continue to sell down. They still have some momentum to the downside. But again, I think whatever momentum you're seeing in the downside is going to be pretty short-lived if gold continues to hold up. All right, if gold continues to hold up or even rallies, the miners are going to snap back pretty quickly as well. So I'm still bullish on the miners. I'm still bullish gold. Again, my analysis comes down to the gold bullion chart and the fact that we're holding strength, holding support. We have bullish divergence. So those miners should rally if we can continue to hold support. Okay, that's all I have today. So in general, still bullish on tech stocks. Bullish on gold and the gold miners. Bearish, although not heavily bearish on the oil stocks, because again, I think a lot of that initial leg down has played out. There might be a little bit more. And yeah, I'm just continuing to watch those key levels that I pointed out. So guys, drop me a thumbs up. Again, I will not be in town on next week. I will be out of town next week. So I will see you guys when I get back. I got, a couple more days this week, so let's keep an eye.